So Aditya started his investment journey at the height of in 2008. He has a deep understanding of BFSI sector. He's a CFA by qualification. He was one of the first one to warn the street about the imminent crisis in Yes Bank, DHFL, cooperative banks, and so on. He bought two banking stocks during 2008, which he still holds to this date, and those stocks have created immense wealth for him. His quotes have been taken up by many media agencies, and he's a regular guest speaker on CNBC Bazaar Gujarati. Rita, glad to have you with us. Okay.
Yeah, thanks a lot, Utkarsh, for that introduction. I'm audible properly, right?
Loud and clear.
Loud and clear. Okay, thank you. So I will take on. I will get straight to the point. So over the last 3.5 years, what we have seen is that we have seen the entire financial sector of our country take a massive beating. Stock prices have not given any return, while the Nifty is doing absolutely fantastic. So what really is happening on this space? We will decipher all of it one by one. We will talk about the large private sector banks. We will talk about the small private sector banks. We will talk about the fiasco that happened in RBL. We will talk about the fiasco that happened in Ujjivan. Then we will move on to the PSU banks, one of the hot spaces where investors have been able to make a lot of money. And then we will move to the beaten down space of microfinance, where problems galore and lenders are facing a very torrid time that is there. And we will close down the session by talking about the uh, most hated space that is in the lending space, which is the NBFC space that is there. So first, let's talk about the financial space as a whole. What is happening? So ever since 2018, right from 2014, right up till 2015, 16, 17, financials were the leader of the bull market. They were the ones who were leading maximum, who were giving maximum returns in the Nifty, and 30 to 35% of the index was oriented towards the financials. What happened in 2018? The massive IL&FS crisis hit and it crippled the economy. We have not been able to recover from the 2018 IL&FS crisis even today. Banks were very scared to lend to anybody in the economy. Banks are not lending to banks. So I have this quote from V. Vadanathan that at one point in time in 2018, banks were not lending to banks because they were so cautious as to what the balance sheet was for the other bank. There was a massive problem inside the market. Credit growth has slumped now, and credit growth ever since then had slumped, and now it is continuing to go down and is at about 50-year low. That is said. Uh, so at 50 years low, at a point where COVID-19 crisis hit again, and COVID-19 was horrendous for the lenders. Uh, Companies like Bandhan Bank saw their NPAs rise from 1% to about 10%. Companies like Ujjivan have lost about 25% of their book to the COVID-19 crisis. And uh, if the management did not would not have resigned, could have lost more amount of book that is there to COVID-19 crisis. So all said and done, जो भी बुरा होना था वो हो चुका है. हिंदी में हम कहते हैं ना कि अब इससे बुरा क्या ही होगा lending sector के अंदर. अब जो होगा वो अच्छा ही होगा. The only good thing that the RBI was able to do was RBI forced all of these lenders to raise huge amount of capital as the COVID-19 crisis hit. All banks sold their shares and raised huge amount of capital. Private sector banks continue to sit on a capital adequacy ratio of anywhere between 16 to about 22%, which is the highest being Kotak having a capital adequacy about 22-23%. So what we feel is that now the stage has come where 3 to 4 years of consolidation within the lending sector has happened. The cyclical downtick that the economy had gone through even before the ILFS crisis, accentuated by the ILFN crisis and worsened by the COVID-19 crisis, are starting to bottom out. The economy is starting to recover back. Economy will slowly and steadily start to recover in the next 2 to 4 years as the COVID-19 crisis uh, goes away. It becomes shallower and shallower. We will find that all the lenders who are sitting with huge amounts of capital inside their balance sheets will tend to slowly and steadily push credit into the system. And once credit is pushed into the system, we will find that economic growth will be back into the economy. The essence of economic growth is push of capital inside the economy, and that will slowly and steadily happen, which will give rise to corporate capex that is really there, right? So, point number one, there's a strong concept called mean reversion, which will play out within the financial services space for the next 2 to 3 years. It should have played out in 2020, 2021, but COVID-19 crisis accentuated the fall for the sector and slowed down the growth for the sector. As COVID-19 will ease out, all these lenders have started to show excellent performance. I have not seen this good commentary from all lenders collectively over the last 8 quarters. This quarter was an exceptional quarter for lenders, and I had put out this tweet that the bashing that the stocks are really getting is not justified. The lenders are doing very good job at recovery and making sure that the bank balance sheets are very strong so that NPAs are taken care of. So this is one part of it, one aspect of it where we feel that point number one, lenders have bottomed out. Now within the sector, if we go from the macro view where we are first saying that the lenders have really bottomed out to the micro view where we say that look, lenders have bottomed out, but where do we bet on? Point number one, there are some micro trends playing out within the lending sector. The first biggest micro trend that is playing out is that PSU banks continue to lose market share. Private sector banks, and within the private sector banks, the large private sector banks aggressively continue to gain market share within the deposit side of it as well as the loan growth side of it. It is very peculiar that the government is not trying to arrest this fall, and this fall has been pretty dramatic. So let me give you some numbers. In 2010, the private sector bank market share was nearly about 10%. Now it has risen slowly and steadily to about 35%. And now we are on roads where 50-50 will come. And after 50-50 will come, we will be in a space where private sector banks continue to dominate India's market share that is there. So what is really happening is that the PSU banks are very poorly capitalized, or they are forced to give out loans because of the social responsibilities of the government. uh, they are rigged with NPAs, which slows down their loan growth and the deposit growth that is there. So, number one micro trend that is playing out, PSU banks continue to lose market share to private sector banks. Number two trend that is playing out within the private sector banks, small private sector banks continue to lose out and large private sector banks continue to do exceptionally well. The market share gain for large private sector banks over the last 2 to 2.5 years has been exceptional. Companies like HDFC Bank, companies like ICICI Bank, companies like Kotak are doing exceptionally really well. And the stock price has not given any return, but business wise, these businesses continue to become even more stronger. This is what happens when uh, a sector is going through a severe downturn. There is a lot of consolidation that happens inside any sector, and the same thing is happening inside the lending space where small private sector banks are losing market share and large private sector banks are gaining market share to a point where we will find that slowly and steadily large private sector banks will become so big that they will be very keen to start to acquire smaller private sector banks that are there. So this is the second micro trend that is playing out. On small private sector banks continue to lose and large private sector banks continue to gain. So where are we bullish on? So how do you make a basket of stocks which will give you exceptional returns over the next 2 3 years as the lending cycle plays out, provided COVID does not hit back again? Point number one: the bulk of your portfolio should be aligned and should always be aligned towards large private sector banks. These businesses have cost of funds anywhere between 3 to 4%. Once you have cost of funds between 3 to 4%, you have a massive moat inside your business. The business can give out loans at 8 9%, which a small private sector bank having cost of funds anywhere between 4 5% will find it very difficult to do because it will not be able to make the spreads after all the costs that have been calculated. So, large private sector banks have a mode inside their business models because their deposit franchise is extremely very strong. They will find it much more easier as the interest rate cycle continues to rise. One of the biggest advantage of having a class deposit franchise, by deposit franchise I mean CASA franchise, the current account franchise and the saving account franchise, as well as the deposit franchise uh, that the banks have really got, the long term deposits that the banks take from individual deposit holders. Uh, the strong as the interest rates keep rising, all lenders will have a problem in rising cost of funds, the funds that they use to lend to corporates or lend to retail. Those companies with very strong CASA and retail deposit franchise will do exceptionally really well. And what we find here is that large private sector banks, banks like SBI, banks like HDFC Bank, banks like LCC Bank, have the power to price their deposits. Once they have the power to price their deposits, they will do exceptionally well as the interest rate cycles move up. Interest rates are exceptionally low because of the COVID-19 crisis, and they will not stay here. Uh, we expect that the interest rate should start moving somewhere in the middle of this year, and the RBI should become aggressive as the year ends. Maybe the Russia and the Ukraine war is another problem for the RBI as crude oil prices continue to remain very high. It will again push the RBI to keep increasing the rates. So the broader point is, in an increasing rate scenario, favor the banks with very strong CASA franchises, very strong deposit franchises that are really there. Point number one. Point number two, all large private sector banks are exceptionally well capitalized. Bar SBI, SBI has chosen not to raise money, but they can also raise money. Uh, HDFC Bank sits at a capital adequacy upwards of 18%. Kotak sits at a capital adequacy of about 20 to 23%. ICICI Bank, again, similar 18-19% of capital adequacy that is there. So what does this mean? It means that these lenders are flushed with so much of capital that they are ready to give loans as there is an upturn in the economy. It is just a matter of time that these guys continue to push credit into the system, which is absolutely very clearly seen by the fact that everybody is now rushing to give out home loans at about 6.4, 6.5, 6.6%, which is a decadal low home loan interest rate that is there. That is the first point that is there. I have been invested personally in Kotak for about 12 years now, and Kotak's Kotak's quarter-on-quarter growth has been about 8%, which will annualize to somewhere about 40%. So what I now see here is that Kotak, which is one of the most conservative lenders, is now ready to grow. Uday Kotak, on his con calls, tells us this that I am now ready to grow. I have seen all the bad phases. Within the bad phases, I have it has helped me to uh, become stronger and stronger. And now I feel that I am ready to push with all of my ammunition. What I find is that I don't have enough people to process the home loan applications that I am getting. And this growth will not only stay here, we will also get into the unsecured part of it, where I was very cautious in 2016, 17, 18. And I will grow my business very strongly over the next 2 to 3 years. One thumb rule is that when Uday Kotak becomes cautious, which he was ever since 2018, it's time to be cautious. Uh, he is the lead indicator of what happens in the banking industry. Uh, in 2021, when Uday Kotak has started to become very aggressive on his lending practices, we have to take note of what he's really doing. And as these banks are flushed with capital, they will again push loan growth into the economy. That is it. The third thing why large private sector banks will do really well is that their provisions are far in excess of the NPAs that they really have. Because of the excess capital that they have got, all of them have provided well above 100% of their NPAs that are really there. So the COVID-19 crisis, at least for the large private sector banks, is over and done with. There's nothing to worry about on the asset quality side of it. which we cannot say about the smaller private sector banks. To some extent, we can say that about the PSU banks, but we cannot say that about smaller private sector banks, and neither can we say about the micro lenders or the NBFC lenders that are really there. So that's the broad scenario on the large private sector banks. Have very good capital adequacy ratio, gaining of market share from smaller and PSU banks, and control over NPS will mean all large private sector banks continue to do exceptionally well. Some of them have not done well over the last 1 year, but they have their own reasons why they have not done well. For example, in HDFC, the loan growth had slipped over the last 1 year, which will now start to come back, meaning they will do exceptionally well. Or a Kotak, which is not done well because the loan growth was not really there over the last 1.5, 2 years. So point number one, major chunk of your portfolio, 60-70% of your portfolio should be pointing towards the large private sector banks. Then let's come on the smaller private sector banks. The biggest victims of the COVID-19 crisis have been the smaller private sector banks. All banks across the board have taken a massive you call it an RBL, you call it a Yes Bank, you call it a Bandhan Bank, you call it an Ujjivan, you call it an Equitas. Everybody has got a massive hit because of the COVID 19 crisis. Some of them have managed well, some of them have not managed well, where unsecured exposures continue to be extremely high. Those places have taken a massive hit. For example, the Bandhan NPA number before the COVID 19 crisis and before the Assam crisis was at 1%. Now it has shot up to about 11%, together with the fact that the SMA book was also pretty high. It was in double digits, the SMA book, which means that those loans are very suspect loans where payment has not been made from 0 to 90 days. So, small private sector banks took the massive hit of COVID-19 crisis. NPAs for many of them rose exponentially, and a lot of them are not doing well. One of the biggest disappointment for me has been DCB Bank, where despite having a secured book, they were not able to control their NPAs, and NPAs there also shot up massively because of COVID-19 crisis. And it is a story of over promise and under deliver. Though now they have said that they are going to double their book in the next 4 years. However, it is really very, very disappointing that DCB has not been able to perform anywhere close to investor expectations. Then let's come on RBL. RBL, it's a very disappointing case. What's happening with RBL? Uh, on that stock, I found the management to be very good, very honest. In fact, I have not seen the disclosures that RBL really makes from any bank that is out there. It's a very exceptional management that we have got. But the lesson that we learn here is that even exceptional managements make mistakes while executing their vision. The mistakes that RBL has done is that their unsecured book was too much out of their control, and too much exposure was given to the unsecured book, which was leading an increase of risk in the bank. Risk management policies for the bank were absolutely not poor, absolutely not good. Uh, 50 from their retail book, which was about 60% of their total book, nearly about 35 to 40% of that book was in credit cards, which is a very high risk, high return strategy that is there. And any bank should not be secularly taking that amount of high exposure within the credit card space. And to many people whom I have talked to within RBL, and within the analyst community, most of them feel that uh, one of the major reason was for Vishwavir Ahuja to be given a pink slip is that the risk management policy was not exactly as what RBI wanted. RBI wanted RBL to lessen down on its unsecured book and move towards secured book so that it lessens down the risk. So, what is the difference between unsecured and secured book? In the event of an NPA, an unsecured book, it totally turns out to be an NPA and there is no recovery as such if the asset defaults. If the book is secured, then what really happens is the bank is able to recover anywhere between 40 to 60%, and that helps the bank to lessen down the hit that they are going to take because of the non-performing asset that is there. So The broad risk management policies from RBL were not great. Then the COVID-19 crisis came, and the credit card space and the microfinance space took a massive hit. That is there, and because of that, RBL went again down the drain, and the stock price tanked even more. And RBI was also seeing that there is no clear vision as to how the successor, who will be the successor to Vishwavir Ahuja, and the bank was not even giving full concentration to who the successor would really be. So then what really happened was that RBI told Vishwavir Ahuja to step down and move out. One of my biggest mistakes in analyzing banks has been RBL, where I was uh, very enthused by the management. I was clearly able to identify Yes Bank much before anybody was, because of the toxic nature of the loans that they were giving to builders. And within the corporate side of it, they were trying to windowless loans to companies which were clearly seen having problems in the corporate governance as well as their business performance. However, I was blindsided on RPL that uh, the management is very strong and they will take care of the underwriting quality that is there. The thing that I learned from RBL is that don't blindly trust management. Trust management, but also look at the areas where the banks are really growing. If the banks are really growing very fast in a highly risky area, let's say a microfinance, let's say a credit card, let's say a personal loan, which are all very high risky strategies to take, you have to be very careful. Point number one. Point number two is small private sector banks have a problem. What is that problem? That problem is their cost of funds continues to be extremely high with respect to the large private sector banks. See, all of them are competing within the same market. And if you compete within the same market, the problem is that somebody is able to give a loan at 8% when my cost of funds is 8%, right? If you go and lend to somebody at 20-25%, then obviously you are lending to a highly risky person, which in times like COVID-19 can backfire, can have a problem. And this is something that you have to be cognizant before you go and invest in a small private sector bank. Paying a 2x, 3x valuation on a small private sector banks, uh, 2x, 3x price to book, sorry, can be extremely very risky, and you have to be very careful with respect to where are you on a credit cycle. Today, we are sitting at the bottom of the credit cycle. We expect that the credit cycle should turn around in the next 2 to 3 years. So all type of lenders will do well. However, at the top of the cycle, if you pay a 2 to 3x for a small private sector bank, then it is a real problem. You have to be very, very, absolutely very careful about the valuation that you uh, tend to pay here. That is the second point that is there. Then the third problem that is there on the smaller private sector was the curious case of Ujjivan Small Finance Bank. It was a very surprising event that Mr. Cho had resigned from the company. uh, it was very clear that the holding company board was not really happy with the amount of NPAs and the strategies that were being followed by Mr. Chok that is there, and they were taking exception to the fact that it was taking very long amount of time for Ujjivan to diversify out of just microfinance into other businesses that are there. Now I see Ujjivan talking about wanting to diversify into a lot of other businesses so that the risk gets very, very uh, diversified that is there. So that is what happened on Ujjivan Small Finance Bank. Then let's talk about the Bandhan Bank. Bandhan Bank is one of the most hit in the last 1.5, 2 years. We had a stock price on Bandhan Bank at about 700. Now it trades at about 280 or 270 with today's stock. That is it. So what exactly happened on Bandhan? Very simple. Bandhan is a high risk, high return game. At 600, you exceptionally don't buy it when it trades at 6 times price to book. Bandhan lends to the lowest of the low category amongst the uh, lending community. And when a crisis like COVID-19 crisis comes and daily wage workers get hit, those guys to whom Bandhan is lending, then there is a problem. And once there is a problem, then the NPS search for Bandhan Bank. So that is what exactly has happened for Bandhan. As the daily wage workers got hit due to COVID-19 crisis, the recoveries slowed for Bandhan. At one point in time, the recoveries for Bandhan were in the 80s range, which was very, very scary because once a bank starts to lose 10 to 15% of its book, it has to provision 10 to 15% further because these are all unsecured. These are all very unsecured loans that are there, and Bandhan stood to lose about 25 to 30% of its book. So, very scary things happened on Bandhan. I have seen people who have bought the stock at 600 and are now stuck. Brokerages have given a report where they have said that you should buy Bandhan at 600. And that was the exact time when I had tweeted that this is not the time to buy Bandhan. The time to buy Bandhan will come when nobody actually wants to buy it. Today, when I tweet about Bandhan that the time to buy Bandhan has arrived and will arrive in the next 2 quarters, people tell me that what are you talking about? You don't know anything about the banking sector. That is it. But you have to buy micro lenders when nobody wants to buy them, and you have to sell them when everybody wants to buy them. It should be absolutely very clear that uh, micro lenders are very, very cyclical in nature, and they are not long term compounders. They will continue to remain cyclical until Bandhan diversifies itself. It has diversified to home loans because of Group, but once it diversifies to other businesses, we will find that the risk is lower on Bandhan, and at that point in time, it will continue to remain a stable compounder. So, where are we on the broad asset allocation within the financial services portfolio? 60% of your portfolio should be towards large private sector banks. Then what you can do is microfinance has bottomed out, and microfinance from here should do well over the next 3, 4, 5, 6 quarters. You can add a micro lender or a small bank on your portfolio, but because by default all small banks have a little bit of diversified book, and microfinance is also included in that book. So you can add microfinance lender to your portfolio, but these microfinance lenders are high risk, high return game. These will continue to remain volatile, and if a COVID-19 type crisis continues to hit again, there will be a problem that is there. So microfinance cycle has bottomed out, and you should make sure that you are looking at some microfinance lender or the other, because as the cycle will go up, these guys will clock up a growth of 20, 30, 40% within no time, and the stocks will shoot up like crazy once the cycle begins to turn up. Then the third thing comes up. Everybody keeps telling me that I was very negative on the PSU banks that is there, and PSU banks will never be able to create wealth. Now, what has happened is that a lot of PSU stocks have given return, which is fine. But will they be wealth creators? The answer is no. Will they remain cyclical? The answer is yes. PSU banks have the power to create wealth from here. The balance sheets of PSU banks have also got cleaned up. COVID-19 was the last hit that the banks have really taken. Uh, Many banks have taken a lot of pain because of COVID-19 crisis, and these PSU banks, they will also embark on the credit growth as we go up the credit cycle, and government will try to capitalize 3 or 4 PSU banks. But broadly, uh, these stocks will remain a cyclical wealth creators from the top of the cycle up till the bottom from the bottom of the cycle up till the top of the cycle. If you are able to catch these stocks can become good wealth creators. We can see that exact thing is being done by ace investors like Rakesh Jhunjhunwala when he's got Canara Bank, or Madhusudan Kela when he's also about Canara Bank. What these guys are trying to do is that there is going to be a secular uptick in the credit cycle, and within the secular uptick, these PSU banks, because the cycle is so strong, the poorest of the poor lenders will also do really, really well. And these PSU banks are the poorest of the poor lenders in terms of credit quality. And once this happens, these guys will also remain a wealth creator in the short term. However, in the long term, once the credit cycle again reverses, which should happen 5, 6 years down the line, then these stocks will again become wealth disturbers that is there, and they will face a problem that is there. So 10% of your portfolio can be aligned towards PSU banks. However, you have to be very careful not to become greedy, and not to overbet on these companies, because the underlying fact remains that the owner of these banks continues to be the government, and the government cannot shy away from its social responsibility towards people. And a lot of time, government also uses the influence of PSU banks to its own advantage, which we can never deny. I have heard stories saying that there is a change in the way the PSU banks really work. Let me assure you, there is no change in the way PSU banks really work. Uh, the Babu orders continue to keep coming, and if we expect PSU banks to change, then we have to think we are not analyzing them properly. That is it. So 10% of your portfolio can come from here. Let's come to the last sector that is there. The last sector is the Nbfc sector. This sector will see the maximum return as the credit cycle will come about. Stocks here have been beaten up like crazy. Nobody wants to own NBFC that is there. It is the exact reverse of what was happening in 2016 and 2017 when everybody was wanting to just buy NBFCs. Now the exact reverse. Nobody today wants to own an NBFC. Many of these stocks are now trading at well below book value that is there. Some of the stocks have got real value in them. Of course, they are in no way competing with banks, because some NBFCs, let's say Piramal, is itself borrowing at 8%, where an SBI is giving out loans at 8%. So NBFCs will not be able to compete with banks that is there. However, what they will do is that they will cater to the lower category borrowers, where there is a huge market for those quality borrowers as well. And slowly but steadily, those NBFCs which have survived the Island FS crisis will take a massive re-rating that is there. Today, I find many stocks that are available just for free. There is no valuation that is uh, being given to those stocks that are really there. So once the re-rating of the entire financial services sector really happens, what will happen is these stocks will go from 0.4, 0.5, 0.6 times price to book to about 1.5, 2 times price to book, and that is the exact time to get out of these stocks that is really there. A lot of these stocks will become good wealth creators over the next 2 3 years, and you have to figure out where is the exact opportunity that is there. Any NBFC trading at about 2 to 3 4 times price to book is a separate story, and you have to look as to why the market is giving those kinds of multiple that is there. In fact, a good NBFC like HDFC trades at a 10-year valuation low when the business is doing exceptionally well, and it has not done this well over the last 10 years. So that's the last 10% of your financial services portfolio that you should be creating, where maximum delta is available, and as the cycle will go on, we will find that maximum re-rating will happen. So then let's come on to the last topic that is there. The last topic that I want to really talk about is this whole buzz of the fintech space that is there, and the buzz that fintech space will disrupt the banking sector that is there. Let me be very clear. Banking is banking, and fintechs have no knowledge about banking. They are just trying to use technology to deliver loans. Uh, Technology is not the only criteria to deliver good loans. Good quality underwriting is very much required, and these companies have very little expertise on this. Point number one. Point number two is to become successful in lending, you need a very high quality deposit franchise. And by the structure of banking regulations in this country, RBI will never allow fintechs to become a deposit taking franchise. We can have neobanks, but neobanks are a very separate story, which we can discuss any other time. Uh, lack of good quality franchise will mean that the cost of funds continues to become extremely high for these companies that are there, and as the cost of funds will continue to remain extremely high, many of these players are trying to do something known as a buy now pay later concept that is there. They will have credit costs that will range from about 25 to 30%, which a normal NBFC will not be able to bear. And they will continue to require huge loads of capital for them to sustain. And that is why companies like Bajaj Finance do extremely well. They have the ability to control credit costs and make huge amount of money on the BNPL play. The BNPL play is a very good play. It's a highly profitable play if you are able to control the credit cost. But the credit cost or the NPA cost that is there is upwards of 10 to upwards of 20 to 25%, which is highly unsustainable for any NBFC which does not have a strong deposit franchise or which does not have a good quality profit earning machine that is there, which will always keep helping them with the profits which can be reinvested inside the business. So fintechs will not disrupt banks. They will become co-lenders with the banks, or some fintechs will force the banks to adopt technology at a much faster rate. So banking is here to stay. A banking license in a country like India is a priceless commodity to have. Very few people have the banking license. And over the next 10, 15 years, these banks should do really well until we see uh, fintechs or banks becoming fintechs, which will happen 10, 15, 20 years down the line. Just that most banks will have to continue to invest in the technology that is there, right? So, Utkarsh, with that, I think we should open up for question and answers because I have laid down my framework as to why we believe that the lending sector has really bottomed out. Because I'm not able to hear you. Is it with me or everybody is not?
Yeah, it's not audible.
Yeah.
Yeah, so Aditya, I had one question. You
Yeah.
touched
Please go
upon
ahead.
the NBFCs in brief and the PSU banks, but within NBFCs, there are government PSUs, sectoral PSUs like PFC RECs, who are optically trading very cheap. But do you really believe that they are cheap? And what is your view on their book, basically?
Okay. Okay. So I tend to say I have always stayed away from PFC and REC because of whatever power problems that the the entire power sector faces. So tend to will advise that do not go towards these government PSUs. You can, if you want to look at government PSUs, you can look at companies like IRFCs, which are doing exceptionally well. Other than that, I will tend to stick to private sector NBFCs, and within the private sector NBFCs, you have to look at the most beaten down space. Most beaten down space are the auto lenders, where auto sector itself is going through such a bad phase that NPAs have dramatically shot up for them, or the housing finance companies where they are doing exceptionally well. We have some microfinance companies also available, but they're not trading very cheap.
And you mentioned that RBL has a great management or had a great management. So, can you elaborate what made you think like that? Because in terms of delivery, also they were lending very aggressively 3 years back, growing at 30%, 35%. At advances level. But when the tide turned, everything went into drain, and stock price came down from 716 to 102.
Mm,
So.
mm.
And I think the CEO has been sent on leave or fired, whatever. So it has
Correct.
all the ingredients of shadow yes bank kind of scenario.
So
So
let
what
me
made
make
you
it
think?
very clear. Let me make it very clear. A yes bank scenario is not comparable to RBL. A yes bank was a clear case of fraud. RBL is not a clear case of fraud. It should be very clear to investors that investors must not spread that kind of panic within the banking sector. RBL was a pure case of becoming very aggressive at the wrong time. Let me give you an example. In 2008, I had invested in Kotak, and Kotak did a very similar thing where they were aggressive on certain kind of loans, which turned out to be an NPA, and the stock did not recover for 5 years. It was only in 2011, end of 2011, the stock started to recover, and about 2012, near about 2012 or 2013, was the first time when Kotak broke its previous lows that it had seen in 2008. RBL is a case of purely being aggressive at the wrong time and not caring about the underwriting quality. That is the first point. That is it. Second point, what made me believe Vishwavi Ahuja was a very good management that is there. Of course, in hindsight, I was wrong, but the level of disclosures and the level of honesty that I could see in Vishwaveer Ahuja, I was not able to see in any other management that is there. Even today, if you look and open up RBL's presentation, you will find that the level of disclosures that the bank is really doing is on another level, and no bank is able to top it. I have not seen any bank giving the collection efficiency on the credit card space within the 0 to 30 day NPA bracket, 30 to 60 day NPA bracket, and 60 to 90 day NPA bracket. Right? So, very few banks really do that. Very few banks give very granular details about how they have written off, what they have written off, how is their asset quality really moving, and RBL was really doing that. Where I missed the point was that how aggressive are they on their unsecured books, and I should have taken cognizance of that fact. However, I have never put any mid cap bank inside, generally not on client portfolios. That was a personal loss that I had incurred, and it's fine. That made me realize a lot about banking. And the next time I will make a new mistake. However, the same mistake I will not make again. Right? So,
Hi, Aditya. I
yeah,
sorry to interrupt.
please go.
Yeah, I wanted your views on two companies. One bank is Karnataka Bank and one NBFC MAS Financial. So, if you track them or if you have any idea about them,
Yeah.
it would be
So,
great. Thanks.
so I will tend to stay away from Karnataka Bank because I don't think that the bank has any growth strategy that is there. I mean, that's why it trades where it trades. It's been a wealth. It's not been a great wealth creator because of this simple strategy that Mr. Mahabaleshwara. I find that there's a lack of vision. There's a lack of aggressiveness that is there. So I find it very disappointing. That's on Karnataka Bank. On Mass Financial, I will not tend to comment because I have not completely understood the business of that company.
Thank you.
Anybody who has questions can please ask.
Hi Aditya, sorry, this is Vineet. I joined very late. I just joined 5-10 minutes back. If you have already covered IDFC First Bank, then I'll just have a look at the companies. Otherwise, I'm happy to hear your thoughts.
No, I'm not covered IDFC Bank, so I'll cover it now. So V. Vaganathan is an exceptional leader that is there. He built a great franchise on Capital First that is there. All said, all of that done, but he has got significant challenges for the bank. The cost side of it is a huge challenge for the bank within the cost of funds as well as the cost of branches that they are really putting up. It is nowhere comparable to what a large private sector bank really is. And the second point is it is a very unique thing to run a bank. When you run an NBFC, the challenges are very different. When you run a bank, the challenges are very different because 25% of your funds are tied up with the RBI on different uh, level of protection that the RBI needs to make when you are a bank. So what really happens is that the book is not very seasoned. The book needs to be seasoned. We need to see uh, how the loans that Mr. V. Vaganathan has given over the last 2 to 3 years turn out in the next 2 to 3 years, and how the NPA movement happens over the next 2 3 years. However, to my mind, V. Vaganathan is a great leader. It's a very good stock with a very good potential. But as of now, we cannot say much about the underwriting quality of the company because the book is not seasoned. We've not gone through a whole process of NPAs that are there. COVID-19 was not a NPA cycle for the bank because the bank was taking shape and we Vaganathan was just clearing out all the old NPAs that are there. Now, when the next NPA cycle comes up within the next 5 6 years, you will be able to really see what is the quality of this company.
Aditya,
So
hi.
Aditya, sorry,
Go
just a
ahead.
follow-up question. Aditya, if you look at the cost to income ratio and etc., which you briefly touched upon, you mentioned it's not comparable. So
Mm.
when you say it's not comparable, why would you say that? And can you put some light there?
Yeah. So if you look at an HDFC bank, see, broadly all banks are competing in the same market. It is not as if that IDFC is competing in a different market and HDFC Bank is competing in a different. Absolutely not. IDFC would love to lend to a client who is willing to borrow at 8%. But IDFC does not have that capability looking at the cost of funds and looking at the cost to income ratio because they are spending heavily on branch expansion. Their cost to income ratio is not comparable to an HDFC bank where the cost to income ratio is expected to go below 40%, right? I think, as I understand, I don't remember the exact number, but it is 2x, nearly 2x of what HDFC Bank really is. So my costs are much higher than HDFC Bank, but I'm competing in the same market as HDFC Bank for top clients, right? So then what happens? Then V. Vanathan has to go to a client who will accept an interest rate of 12, 13, 14%, and that's where the risk comes in that if that client defaults at some extent, then there will be a problem. So that's a challenge in the business model of these small finance banks that large banks continue to take away all the big good clients that are there, and uh, smaller banks will have to live with the riskier loans that they have to give out, and with the riskier loans that they give out, there is a higher chance of getting an NPA as compared to a large private sector bank. So that's the real problem in all small private sector banks. However, I expect one or two of them to tide through these challenges over the next 4 5 years. And it's anybody's wild guess who those players will be. As I said, V. Rajanathan is a good candidate, but let the book get sealed.
All right, thank you, Aditya.
Thanks.
Hi, Aditya. Love the work you guys do
Yeah.
on Twitter all the time. Couple of questions. One is for the average investor, given everything you've spoken about tonight. Is it best for the average investor to get into bank Bs and play the financials? I know NBFCs don't get covered, and those anyway are cyclical plays. And secondly, for a lot of other sectors, typically, looking at P, looking at some of the other, numbers works as a yardstick. In the financial sector, however, that doesn't happen. So if the average investor is looking at, a financial company, what are the numbers that they should be looking at as a, primary step?
Okay, so the first question, you can look at bank Bs only when you have the ability to time your exit from bank Bs that is there. If you don't have the ability to time your exit, better on a fund manager who is investing in financials at this stage. I don't see a fund manager not investing in financials at this stage. I will tell you some examples. PPFAS is aggressively investing 60% of its money into financials, the new SIP money that it gets every month. It is investing in financials. Mirai, similar thing with Mirai. Mirai is investing aggressively in financials. I will not see a fund manager not investing in financials. It's a no-brainer. I will suggest if you are able to time the market properly at the top of the cycle, if you can exit, go for bank Bs. If you're not able to do so, buy a diversified fund and you will find them very easily. A flexi cap fund will do it and you should be okay. You should be able to capture the upside of it. But the major upside of it will be captured by someone like a bank Bs or someone like a financial services mutual fund that is there. That is one part of it. Second part of it, how to analyze bank. It's a complex process. You have to look at the management. You have to look at the loan book. What kind of growth? Where is the loan? Where is the loan book really growing? What kind of loans is the bank really giving? Broad numbers. If you look at in my life, I have not looked at any number other than the price to book value. I have not looked at NIMs. I have not looked at NII. I have not looked at XYZ. What I have always concentrated on is this. Point number one is management. Point number two is what kind of loans that they are giving. Where are they growing? Where are they not growing? And if you are able to take care of these 4 5 things and easily able to predict where the bank will go in the next 2 3 years, the NIM, the NII, and everything else will take care of itself. You don't have to worry about. And ultimately, when you do this, you are able to control and predict where the NPAs are going to move over the next 2 3 4 years, and that's how it really works. But broadly, not having an analyst mindset and looking the business apart from these numbers will really help you in analyzing banks.
Hi Aditya, Srinivasan here. Thanks for the great insights. I think a few times, there has been a reference to NBFC, right? And I know a lot of the talk information has been on the conversation has been on banks. Uh, do you have some comments on NBFCs, maybe the larger ones, of course, because there I think the smaller ones really come in too many shapes, right? Some of them are really too just shouldn't even be touched. But your thoughts on some of the larger NBFCs? Thank you.
See, on the larger NBFCs, there is no scope for re-rating. Let's say Bajaj trades at approximately high valuations, so there's no absolutely no question of re-rating there, right? Or if you talk about HDFC Limited, what a brilliant business it has got, and I'm very surprised that the market is giving it the valuation that it is really giving, because I just done up this tweet on all the HDFC group companies. HDFC Limited is one stock which does not deserve to trade here. It deserves to trade much higher. Uh, but market will find its own way to devalue the stock. The large NBFCs have, bar few exceptions are there, like HDFC Limited, have very little scope of a valuation re-rating or a valuation multiple expansion on P2B basis, price to book basis. Whereas smaller NBFCs, which have been beaten down dramatically, have a real scope of price to book appreciation as well as the growth appreciation in the stock price, which you may get as the growth moves up. So then what really happens? The growth will be a driver of return. The valuation expansion will be driver of return. So those two are two things. You have to just make sure that you are betting on an NBFC where the business model is sustainable, good enough, so that they are able to grow over the next 2 3 years, and they will do exceptionally well. If they survive, they will be able to make money for shareholders. As simple as that.
Hi Aditya bhai, this is AJ. Pleasure listening to your views. I was on and off because of my connection. आपने IRFC के बारे में कुछ mention किया था when you were discussing about NBFCs?
Yeah, it's a great company, is what I said. Right.
Okay, okay.
Yeah.
तो basically आपको कैसा लगता है IRFC का business?
No, it's a great business. So it's a business where there's zero chance of an NPA. It's a quasi sovereign company that is there, which raises money based on its debt profile of being a quasi sovereign company. No chance of an NPA because they finance the rolling stock for the railways, and the leases are long and they are making exceptional money. So let me give you a small data point. The growth for IRFC has outperformed the growth for HDFC Bank. uh, it has outperformed now the growth for Bajaj Finance as well, which is exceptionally very good. It's a play on the infrastructure sector of this country, and if you're bullish on the capex cycle picking up, then IRFC has to do exceptionally well because a lot of many projects are coming up within the railway space as well. So I don't find a reason why the market should make the stock trade where it trades, or it does.
बट आदित्य भाई बेसिकली उसका एक रीजन ये भी हो सकता है जो मेरी अंडरस्टैंडिंग है कि एक तो इनका जो सर्टिफिकेट और इनकॉर्पोरेशन है उसमें इनका जो नेट इंटरेस्ट स्प्रेड है उस पे एक कैप लगी हुई है आई थिंक वो 1-1.5% का है और दूसरा आपने जो रोलिंग स्टॉक की जो लीजिंग की मेंशन किया पॉइंट उस पे तो इनका मार्जिन ही कुछ नहीं है हार्डली 30 बिप्स या 35 बिप्स का मार्जिन है तो उस पे लॉन्ग टर्म में मतलब उसको वैल्यूएशन कैसे देगी मार्केट क्योंकि अगर 30-40 पैसे कमा रहे हो आप तो कितना ही बिजनेस बढ़ जाए तो वो एक्सपोनेंशियल ग्रोथ तो कभी आएगी नहीं ना would that be a
Okay,
reason?
so this is the broad misconception that everybody's got about IRFC. IRFC का मार्जिन 40 बेसिस पॉइंट से कभी ज्यादा बढ़ेगा भी नहीं, और अगर आप सोच रहे हो कि वो बढ़ेगा तो आपकी एनालिसिस रॉन्ग है. point number one, time and again, it has been clearly spelled out by IRFC that our margins will not go up, and in no case they will go up. IRFC's margin have been 40%, still their profit growth has been 30% over the last 4 years. Very simple. It's a game of volumes. As the volumes continue to ramp up for Indian Railways, the company will be able to make exceptional money that is there. And that's what most of the people don't really understand it when they keep concentrating on the NIMs and the NIIs. Then the company itself has said 100 times that we will not be able to expand our NIMs, NIIs. That is not the place where we are concentrating on. We are concentrating on the volumes. As the volumes continue to pick up, we will make exceptional amount of money. You look at the DFC, the Dedicated Freight Corridor, it's doing exceptionally well. The Golden Triangle between Delhi, Bombay, Calcutta, and Bangalore, much of it is financed by IRFC, right? So as this project takes off, IRFC will be able to make huge amounts of money because DFC will mean very fast freight movement, and very fast freight movement will mean the rolling stock gets turned on exceptionally well, right? So IFC is not a game of NIMs or NIIs, it is just a game of volume. The market may not be giving it a valuation because there is an overhang that the government will come and sell the shares, which it will because its shareholding is below, is above 75%, which is the minimum shareholding, which is a maximum shareholding that the government needs to maintain after 3 years.
राइट राइट सो देयर इज अनदर ओवरहैंग ना जो एमओआर है अगर उसने बोला कि अभी 40 बिप्स है तुम अब इसको 15 बिप्स कर दो 20 बिप्स कर दो तो वो भी एक प्रॉब्लम रह सकता है
In IRFC was incorporated through 2000s, and never has the margin fallen below 40 basis points. They have to maintain that spread because for the lenders, so IRFC is basically an NBFC which has to go to lenders to finance itself. For financing themselves to lenders, they have to show that profitability that is there. Otherwise, Indian Railways itself stands to lose uh, if they chalk the margin to 15%. It should be very clear that this is the only point of discussion anytime I go on a call with IRFC where I fail to understand why have the analysts not understood the business model absolutely very clearly. Indian Railways is in no position to chug off the 40 basis point margin because then the lenders will not finance them because the lenders don't see profitability. And if they don't see profitability, why will they risk money even with a quasi sovereign company that is there? So the company needs to be allowed to make some sort of margin, which is about 0.4%. And as the volumes will ramp up, that will then drive up the profitability that is there. So on the margin side of it, many times the questions have been raised. The worst case scenario in my estimation will be margin goes to 0.3%, and that too in a bad year. Otherwise, let me also give you another example. 2020 was exceptionally bad. 2021 was exceptionally bad year for railways in terms of uh, traffic because there was no traffic from the passenger side of it, and the goods traffic was also very poor. Still, the margin was 40%, was 40 basis points. It will continue to remain at that levels. See, when the stock price is down, we tend to latch on to a lot of biases that are there. As such, a margin problem also continues with an HDFC bank or a Kotak bank, but you generally you expect them to make those margins that are there, and this company will also continue to make that kind of margins that's there. I don't face any issue as such. That is one PSU which I extremely like within the lending space, and it will do exceptionally well on the business side of it.
तो वन ओके आदित्य भाई वन लास्ट क्वेश्चन इनका फंडिंग कहाँ से आता है आईआरएफसी का ये एमओआर से ही तो पैसा उठाते हैं
No, absolutely not. They don't take money from MOR. What they do is that, let me give you a interesting trivia. They have raised a 10-year money at today GSET trades at 6.8%. They have raised 10-year money from abroad at a cost which would translate to much lower than the government of India borrowing. What they really do is that because IRFC के ऊपर गवर्नमेंट का स्टैंप है, वो लोग जाके लेंडर से पैसा उठाते हैं, HDFC बैंक से पैसा उठाते हैं, कोटक बैंक से पैसा उठाते हैं, वो लोग बहुत सारे इंस्टीट्यूशन से पैसा उठाते हैं एंड देन वो फिर मिनिस्ट्री ऑफ रेलवेज को देते हैं, ताकि मिनिस्ट्री ऑफ रेलवेज वो उसको यूज कर सके रोलिंग स्टॉक को बनाने के लिए। एंड उसके जब ये पैसे IRFC मिनिस्ट्री ऑफ रेलवेज को देती है, तो मिनिस्ट्री ऑफ रेलवेज उसके रिटर्न में हर महीने का लीज जो होता है वो IRFC को पे करते हैं और वो IRFC की प्रॉफिटेबिलिटी होती है। तो दैट्स द होल मॉडल दैट इज देयर, वेयर IRFC को कभी NPAs नहीं होंगे बिकॉज उनका
आदित्य
एक
भाई
ही एक ही
आदित्य भाई
उनका एक ही
नेट
या
नेट
please go ahead.
इसमें लेंडर तो नेट इसमें लेंडर तो मिनिस्ट्री ऑफ रेलवेज हो गया ना, क्योंकि गारंटी तो मिनिस्ट्री ऑफ रेलवेज की चली गई।
It's okay. So it's a quasi sovereign, it's a quasi sovereign company that is there. What does that mean? It means that not Ministry of Railways, but the government of India guarantees that company,
Yeah, that's what.
right? So it's a guarantee, but the money is not of Ministry of Railways. The money is of lenders. वो लेंडर का पैसा है, वो मिनिस्ट्री ऑफ
That
रेलवेज का
is
पैसा नहीं।
that is true for many of the PSUs. They are able to raise money at lower than GSEC. Even SAIL does that, despite not being a AAA. They get sub 6, sub 5.5% rates. So it is not unique to IRFC, but since IRFC is into lending business, it gives them really good mileage to improve their spreads basically.
If the Ministry of Railways doesn't provide that kind of guarantee to RFC, then IRFC will not be able to raise that money from banks.
विनीत, इसमें गारंटी
Yeah.
नहीं होती है, बेसिकली इट्स इम्प्लाइड दैट सिंस दे आर 100%
Okay, let me tell you. Okay, let me tell you this. Air India raised its debt at 6.7%. I should not say more. Air India, which had about X amount of loan that is there. It's very simple. Government needs that money. Why will the government give me one reason why will the government revoke that quasi sovereign rating for the company? Government needs the money. Government, ये सीधी सीधी बात मैं आपको समझा रहा हूँ, गवर्नमेंट ऑफ इंडिया है ना, वो रोलिंग स्टॉक बनाने के लिए अपनी बैलेंस शीट के ऊपर उस डेट को नहीं ले रही है, उसने एक और कंपनी बनाई जिसके बुक्स के ऊपर वो लेंडर से पैसे लेके फाइनेंस करवा रही है। इट्स ऑफ बैलेंस शीट फाइनेंसिंग दैट द गवर्नमेंट इज रियली डूइंग। नाउ व्हाई विल द गवर्नमेंट अपने पैर पे कुल्हाड़ी क्यों मारेगी और वो बोलेगी कि मैं अपनी रेटिंग को हटा देता हूँ? उससे गवर्नमेंट को क्या मिलेगा? उल्टा रेलवे रुक जाएगी।
So Aditya bhai, a follow up on RFC. So when I was going through their con call, so they were again some of the concerns that AJ highlighted were there, but at the same time they wanted to also say diversify beyond railways, because I think that was where they were thinking that maybe it could be a growth area. But do you think that moment they go outside their railways, then all these benefits or so-called gifted modes starts working against them, and they can become a derating candidate, because then they need to be efficient, and all those underwriting thing suddenly needs to be top notch. So will diversification derate them, or if I understand you clearly, is that a fair assumption?
No, I didn't say anything on derating. It already trades at about 0.5 times price to book. So where is the question of derating of the company? I don't think that there is a question of derating of the company. Point number one. Point number two is how will they diversify? Only time will tell. Diversifying is not a great thing that they are really doing. However, as I still understand it, bulk of their business will start to come from railways only and railways only, and it will continue to come. Diversification will be a small part of their business started, and then we will see how it goes. But broadly, I don't find any reason to complain about for the company. The spreads are not a problem. The Ministry of Railways is not a problem because very clear. आपको पैसा उठाना है बाहर से, आप कैसे उठाओगे पैसे बाहर से विदाउट एडिंग टू योर फिस्कल डेफिसिट by living on this company? If you kill this company, it gets added to your fiscal deficit, and then there is a problem. You don't kill this company.
तो एक क्वेश्चन भी आदित्य भाई, फिर ये डाइवर्सिफाई करना ही क्यों चाहते हैं? मतलब अनलेस इफ यू हैव से इंटरेक्टेड विद द मैनेजमेंट इन द पास्ट एंड इफ यू कैन understand their reason behind why should they even diversify, because when I hear you, it seems it's a just a case of undervaluation right now. They think maybe it deserves slightly better rating because of all the points that you highlighted, but why even diversify? If do you have any answer or any based on, if you have been following this company for long, what's the intent behind it? Is it growth? Is it better
Yo,
margin?
no, I don't know. I don't know why people in the financial services space concentrate on margins. Margins don't matter. I have never seen on a Kotak Bank what is their name. Still today, I don't know what is their name or an I. It does not matter. It's not. It does not matter until you get the strategy right. Getting the strategy right is far more important than getting an NIM or an NII. And people have got it wrong on IRFC when they keep thinking that the margin is low. The margin is supposed to be that. Today I will guarantee that you will never get an NPA. So the cost of that guarantee is 40 basis point margin. Why doesn't any analyst community understand it? Zero NPAs has a cost involved to it. Today a Bandhan bank is sitting on a credit cost which is 10%. राइट तो मतलब क्या उन्होंने 10% ऑफ इट्स लोन बुक चली गई उनकी एनपीए में ठीक है और उसके ऊपर उनको 10% का प्रोविजन और करना पड़ा सो 20% की बुक गई उनकी आईएलएफसी के साथ ये कभी नहीं हो सकता है राइट सो बिकॉज ये नहीं हो सकता है दैट इज वाई द मार्जिन आर लोअर and they want to get into the they want to get into some growth areas. That is why they are diversifying, and as I said, it is not very clear from the management themselves what areas will they look for in when they diversify. So that's a cause of concern. However, on the pure play bread and butter business that is there, I don't feel any problem as such. In fact, even with that 40% margin, I have not seen any lender grow at 30% over the last 4 years, even through the COVID-19 crisis that was there. So when the stock price falls, we have X, Y, Z number of narratives that are there. That's what it really is.
Hi
I
Aditya.
have a
Thanks.
Hi Aditya. I have a question on gold financer. In what are your views on Manappuram Finance?
Yeah,
सर 2 मिनट के लिए मैं आईओएससी पे डिस्कशन कंटिन्यू करूंगा 2 क्वेश्चंस थे बस
Sure.
yeah, you can go ahead. Then I will answer the
हाँ
code.
हाँ सो फर्स्ट क्वेश्चन तो मेरा ये होगा कि अगर आप बोल रहे हो कि सोवेरेन गारंटी की वजह से दे आर गेटिंग द बेटर रेट्स तो वहाँ पे डेट टू इक्विटी रेशियो मैटर नहीं करता या उनको अर्निंग्स रिटेन करनी पड़ेगी टू मेंटेन अ सम काइंड ऑफ डेट इक्विटी रेशियो सो दैट कि वेंडर्स को कंफर्ट रहेगा मतलब ये क्वेश्चन पे
No,
मेरा सेकंड
so
क्वेश्चन डिपेंड करेगा
the company is very under leveraged. कंपनी के पास 15 से 20 टाइम्स लेवरेज करने का पॉसिबिलिटी है बट कंपनी वो कर नहीं रही है बिकॉज कंपनी इज वेरी कंजर्वेटिव. Point number one, they have said that they will increase the debt to equity ratio that is there, but it will happen with time. That is point number one. What was the other question?
बिकॉज अगर आप वो बात कर रहे हो तो देन मेरा डिविडेंड पे आउट रेशियो जो है वो कभी 30, 35, 40% के ऊपर कभी गया ही नहीं है सो दे आर आई थिंक होल्डिंग बैक द कैश और अगर कहीं पे डेट टू इक्विटी रेशियो अगर मेंटेन करना है तो जो मेरा कैश री इन्वेस्ट हो रहा है वो कहीं पे 8% पे नहीं हो रहा है मतलब जो री इन्वेस्टमेंट का रेट जो है कैश का वो कम पे नहीं है वो भी एक कंसर्न नहीं होगा ये एंटिटी में
So you are saying that when the company, if this is what I understand clearly, what you are saying
हाँ
is that if I'm IRFC, I retain profits, right, and then I
हाँ
reinvest it back in my business, I am getting a lower interest rate. Is that what you are saying?
हाँ बेसिकली मैं ये बोल रहा हूँ कि एक तो पहले क्वेश्चन इफ यू आर सेइंग कि डेट टू इक्विटी रेशियो डजंट मैटर एट ऑल बिकॉज सोवेरेन गारंटी है फिर तो आइडियली कंपनी ने सब पे आउट कर देना चाहिए जो एक सरप्लस कैश है रादर देन वो 8% में लगाने से अच्छा और गवर्नमेंट
No,
को भी
I said
बेनिफिशियल है
no. I didn't say that debt to equity is not something that you should look at. I said the net interest margin that the company face makes is inconsequential. Point number one. Debt to equity ratio for the company, which is called gearing, is
यस
exceptionally low. Okay, and the company is maintaining a conservative view on gearing because with higher gearing comes higher problems that are there. Of course, this company does not have an NPA problem, बट पहले मिनिस्ट्री ऑफ फाइनेंस ने मैंडेट किया था कि आपको गेयरिंग क्या रखना है. अब मिनिस्ट्री ऑफ रेलवेज ने
अच्छा
अब वो गेयरिंग का प्रॉब्लम हटा दिया है एंड दे कैन गेयर एज हाई एज 10 और 15 times their earnings. Again, your concept is again wrong. If I reinvest my cash into my business, I'm investing in a risk-free business. Okay. Today, even if
100% है
you एक second. Today, even if you go and invest in a SBI deposit, you carry a risk of the bank. With a sovereign guarantee, you don't carry the risk of anybody that is there, and that's why you will get an interest rate of about 4.5% if you reinvest in that business, and your profits will grow there. Right. So this is a very important concept of sovereign guarantee that very few people are really understanding.
Okay.
They are yeah. Please go ahead.
सर वन मोर थिंग, अगर से आप बोल रहे हो कि कहीं ना कहीं जैसे सोवेन गारंटी भी है वन साइड पे, द एक्सपेंस इज अगेन इनडायरेक्टली बोर्न बाय मिनिस्ट्री ऑफ फाइनेंस बिकॉज वीज के थ्रू अमाउंट पास ऑन हो रहा है एंड इनके ऑपरेटिंग प्रॉफिट मार्जिन्स, द
Hmm.
मोमेंट दे इंक्रीज देयर डेट टू इक्विटी रेशियोज,
Hmm.
वुडंट द मिनिस्ट्री ट्राई टू कट डाउन ऑन एनआईएम्स टू मेंटेन द आरओईज? कहीं पे आरओई का मैंडेट है कि आरओई का मिनिमम कैप रहेगा, या कहीं पे एनआईएम्स का कैप है? कैसे, मतलब अर्निंग्स कौन से लेवल पे गारंटीड है काइंड ऑफ?
नहीं, क्यों? कहाँ पे कोई कहीं पे क्यों गारंटी होना है किसी भी चीज का? और अगर डेट
बिकॉज
टू
दोनों
इक्विटी
साइड में तो
बढ़ता है
सेम ही बंदा है,
तो उससे क्या होता है?
तो
एक
दोनों साइड
सेकेंड
पे सेम
अगर
बंदा है ना, ही भी
एक
डिटरमाइन कि
सेकेंड
वीज वीज कितने
एक
पे देना है।
सेकेंड एक सेकेंड अगर डी वाई ई इंक्रीज होता है, ठीक है,
हाँ,
उससे अगर कंपनी का आरओई बढ़ता है, सो हाउ इज मिनिस्ट्री ऑफ रेलवेज कंसर्न विद दैट? लेट मी अंडरस्टैंड दिस.
बिकॉज दे हैव टू, बिकॉज से रिड्यूसिंग द कंपनी का आरओई या इंटरेस्ट मार्जिन वुड आल्सो रिड्यूस देयर कॉस्ट फॉर रेलवे जो उनके बजट में आएगा कल जाके। सो बेसिकली दे गेट ए हायर शेयर ऑफ मनी बिकॉज माइनॉरिटी का स्टेक कम, माइनॉरिटी के पास कम आएगा बिकॉज कंपनी के प्रॉफिट्स कम होंगे।
हाउ कंपनी के प्रॉफिट कैसे? अगर आरओई बढ़ेगा तो आपका प्रॉफिट बढ़ रहा है ना?
ओके ओके, सो अगर एनआईएम कम हो गया तो लीज रेंट भी कम होगा, लीज रेंट
एनआईएम
कम
कम
होगा ना,
होगा तो
लीज
ठीक है,
रेंट भी कम होगा, लीज रेंट कम होगा
राइट.
तो गवर्नमेंट के लिए खर्चा कम होगा।
हाँ, तो खर्चा कम होगा, राइट.
हाँ, तो अब मेरा क्वेश्चन ये है कि एनआईएम कहीं पे इम्प्लिसिट गारंटी एनआईएम के लेवल पे है, आरओई के लेवल पे है, आरओई
No,
में
there's no
गारंटी कहाँ पे
guarantee.
है?
There's no guarantee anywhere on neither on NIMs, neither NIIs or neither ROE. Okay, let's be very clear. There's no guarantee anywhere.
ओके,
Okay,
बट पास
but
क्लेम्ड कैसे
but
हो रहा है?
but I said na, ever since 1989 when the company was formed, it is maintaining 40 bips margin. And मुझे तो यही समझ में नहीं आ रहा है, अगर आईआरएफसी को गवर्नमेंट मारने के लिए तुरी रहेगी तो गवर्नमेंट प्राइवेट सेक्टर लेंडर्स के पास कैसे जाएगी पैसे उठाने के लिए? मुझे तो यही समझ में नहीं आता.
समझ गया सर मैं। हाँ, वो तो
मतलब
आईआरएफसी का
एवरीबडी
एग्जिस्टेंस ही बैलेंस और बैलेंस शीट फाइनेंसिंग का है।
everybody is not understanding why is IRFC existing. It is existing to off balance, existing for government of India off balance sheet financing. Now if the stock
हाँ,
price was at 40, nobody would raise these concerns. Now the stock price is at 20. Everybody is thinking that the Ministry of Railways wants to kill this company. It cannot kill this company because 125,000 lakh 1,25,000 crores of funding this year is an off balance sheet item. If I put that inside the FIS, you look where the face really goes.
आदित्य भाई, बस
Simple.
मैं आपके पॉइंट पे ऐड करता हूँ कि गवर्नमेंट के जो मतलब जो पॉइंट में मेजोरिटी जनता को नहीं पता है कि गवर्नमेंट के इनकम अक्रूवल बेसिस पे नहीं होता, वो कैश रिसीव बेसिस पे होता है, मतलब पैसा आया पैसा गया। तो जो फ्यूचर रीजेंटल कमिटमेंट उनके बुक्स पे दिखता नहीं है, सो इनके एक्सपेंडिचर में अभी दिखेगा नहीं, जो साल में होगा वो साल में दिखेगा, इससे वो डेफरमेंट का बेनिफिट हर गवर्नमेंट खेल रही है वहाँ पे।
No, it's fine. See, I keep telling this to all my people that is there, that it's a lot about stock bias, stock price bias that is it. Just because the stock is trading where it is trading, we are not tending to completely understand the business model. Of course, there is a margin compression risk with every business that is there. It's with Kotak, it's with HDFC, it's with everybody. But you have to go with what is the probability of that really happening.
बस एक और क्वेश्चन, इज देयर एनीथिंग, एनी गाइडेंस एक्सेट्रा कि डिविडेंड्स बढ़ेंगे, डिविडेंड पे आउट बढ़ेगा कुछ?
No, so for
एनीथिंग ऑन
all Mini
वो
Ratna,
कुछ?
it's a Mini Ratna company which is
हाँ,
controlled by Deepam. So they have to pay anywhere between 30 to 50% of their profits as dividend. That is it, which is because Ministry of Finance and Government of India wants the dividend to maintain the fiscal deficit. That is it. Anyway, as the profit grows, the 30 to 50% dividend keeps growing.
Thanks, Aditya. Maybe it's time to move on from IRFC.
Yeah, definitely.
I had a
Yeah,
question about
I,
Chola Finance.
Yeah, just a
Can you
minute,
follow that?
Bashaman bhai. When you said that our 60% of investment should be in large private sector banks. So is it 60% of the allocation which we should give to the banking sector, or its overall portfolio, and the
Yes,
rationale behind that? Thank you.
definitely. So within your
So आदित्य भाई
allocation,
एक मिनट सॉरी वो
yeah.
एक बार गोल्ड वाला आंसर दे देते हैं देन वी मूव टू द
Yes, yes,
वी मिस दैट
yes, yes.
सॉरी सॉरी
Sorry,
सॉरी
yeah,
सिद्धार्थ भाई
yeah.
है ना हाँ
Yeah, so I will remember this. Okay, on the gold financing companies, I will not tend to buy them if they are available expensive. Now Manapuram and Muthoot both are not very cheap, and the scope for re-rating, in my view, is very less there. Uh, I will not tend to buy just gold finance companies. I will tend to buy a diversified lender that is out there. That will help me tide over a lot of problems that are going to come up. And अगर आपको कहीं पे gold finance company ही देखनी है तो you can look at CSB Bank, but again a caveat, CSB Bank is not really cheap, and you have to see के कहाँ कब किस वैल्यूएशन पे आप बाय कर सकते हो अगर वो नीचे आए तो. But I'm not very positive on gold finance companies because gold finance companies are very risky businesses that are there because they care very little for underwriting. Point number one. Point number two is they only go by the fact that gold loans are secured businesses that are there where uh, you can monetize the gold at any time you want. Then what I tend to do is that I tend to buy them very close to book value or below book value, which is a down cycle time and which is not clearly the case for gold financiers because gold finance business has boomed as COVID has come up and they have done really well. So I will tend to not go there as of now. Right. अच्छा अभी क्या पूछा आपने? Yeah. So the next question that was asked was what is the allocation on the portfolio? So what I said was nearly about 35% of your portfolio should be aligned towards financials, and within that 20 anywhere between 20 to 30% should be aligned towards lenders that is there. So within that lender portfolio, that's how you should construct your portfolio, where 50 to 60% is towards large private sector banks, 20%, 15, 20% is towards microfinance or small lenders, and then 10% is towards PSU banks. That's there. And 10% to
And
NBFCs.
if you can share the rationale behind this allocation.
Yes, as I had shared that the most stable compounders will be the large private sector banks because their business momentum continues to be exceptionally strong. Uh, Market share gains from smaller private sector banks and PSU banks, and very good capital adequacy ratio that is there. Point number one. Point number two is small private sector banks are healing their problems of COVID-19. They have got massive problems. So the stock prices will continue to remain extremely volatile. I don't see an HDFC bank going down 50%, but I can already see Bandhan has lost from 700 to about 350, and again it's gone down to 270 that is there. So smaller private sector banks will continue to remain extremely volatile, uh, but the delta will be higher. So you have to play it safe. That's why just 20% allocation. Then on PSU banks, they are not wealth creators. They are not secular wealth creators that are there. They will continue to face NPA problems here and there. So that is why you have to control the risk that is there. And on NBFCs, it's a place where a lot of business problems are also faced by the NBFCs that are there. When I have an NBFC which borrows at 8% and SBI can give a loan out at 8%, so you have to be careful with the allocation because they are very not so superior business models that are there. And if you are investing in a not so superior business model, you have to control the risk that is there. That is why 10% allocation is.
Yeah, got it. Very well explained, Aditya ji. Thank you.
Thanks.
One more question means in recent days, like we see that the corporates or the private companies, they are hesitant in taking loans. Means we are seeing a down cycle in overall loan structure, means loan takeaway by the corporate. So aren't we seeing a bad phase of the banking sector? And second, uh, we all agree that the interest rate is at the bottom right now. So going forward, when the interest will increase, majorly it is bad for the banks as the interest rate goes high. people tend to take lower loans, and it is bad for the banking sector. Thanks.
Okay, so let me take the first question that is there. What was the first question? I forgot. Mm, okay, the corporate loan cycle. That is. I had put out this tweet here yesterday when I was analyzing the H D F C group that they have seen corporate growth of about 22%, and it is now the biggest structure, biggest part of their loan portfolio that is there. Now they are sitting at 53% corporate book that is there. So I don't see that corporate loans are not there. Corporate loan demand is there. It is there with some banks that is there. Many NBFCs have gone out of that space. Many have become cautious. But this demand will start to come back as the capex cycle starts to expand over the next 1.5, 2 years. uh, capex cycle is slowly coming back. The economy will come back, so the capex cycle will come back, and so will the demand for corporate loans that is there. If there is an uptick in the economy, lenders will do well because an uptick will mean that everybody wants capital to grow, and once capital is required, lenders will come in. So I'm not worried about the demand of loans. Demand of loans continues to be extremely strong. As I said, Kotak is saying that I don't have people to process the number of loan applications that I'm really getting. So demand is not a problem. Now, what you have to really see is how lenders are able to grow without taking a hit on the NPA side of it. That is the first part that is there. And what was the second question that you had asked?
Rising interest rate.
Yeah, no, rising interest rate is positive for banks. It is definitely positive for banks. How is it positive for banks? If inflation is there, very simple. Today, if you look at the IT wage inflation, it many companies are giving exorbitant amount of money to their employees just to retain their talent. So, if inflation is there in the economy, it clearly means that the economy is doing extremely well, which it will over the next 2, 3 years, and people will have more and more money in their hands. If they have more and more money in their hands, it is very obvious that they will spend in the economy and they will take various amounts of loans that are really there. And rising interest rates is positive for banks which have very good CASA ratio and deposit ratio that is there. I will give you an example. Ever since 2014, we were on an interest rate hike scenario, and banks were the leaders of Nifty. Very simple. Interest rate up down cycle does not mean anything. Interest rate hike cycle means that the economy is doing extremely well, and once the economy is doing extremely well, people will come out and spend. Right?
Thanks. One last question. Your top two picks in large private sector banks and NBFC, please.
Yeah, so I will not be able to tell you about stock names. Sorry, I will not be able to do that. But I have broken it down as much as I could. इतना तो यार ब्रेक कर दिया मैंने कि आप PSU बैंक्स देख लो, आप लार्ज प्राइवेट सेक्टर बैंक्स देख लो. अब सोच लो कि लार्ज प्राइवेट सेक्टर बैंक्स में 4 या 5 ही बैंक हैं. अब उसके बाद
Okay,
तो आप
perfectly
देखो.
fine. I was just trying my luck. Thanks.
तो
नहीं
शीतल भाई
नहीं यार.
कोटक वो 12 साल से होल्ड कर रहे थे, एक तो उन्होंने बता ही दिया है, बाकी वो फिगर
अगर आप मैं कई बार कहता हूँ लोगों को कि आप अगर मेरे अकाउंट को क्लोजली फॉलो करोगे तो आपको पता ही चल जाएगा कि क्या होल्ड करना है क्या नहीं होल्ड करना है. उसमें बताने की जरूरत नहीं पड़ती.
Aditya, about your viewpoint on Chola Finance?
Yeah, Chola Finance, I have not been able to study that properly, so will refrain from commenting too much on that. Uh, but I can come back to you at a later date, but not properly well versed with what has happened in the last 1.5, 2 years. Need to study it properly.
But vehicle financing, you don't see as a growth.
Definitely. So what
Growth.
the exact thing that I said is that on the NBFC side of it, the vehicle finance lenders are the ones which have taken a massive. Let me give you an example. Bajaj Finance runs a 20% NPA on its particular vehicle financing book that is there. So that is a place which will see maximum amount of re-rating as the auto sector comes back and the financial services sector comes back. However, it will be a very slow and steady process. With Chola, I have not seen how has their book performed over the last 1.5 years. I need to look at that. But yes, I agree with you that auto lenders will is a place of maximum value at this stage in the market, and I have seen recent upgrades also from brokerages that are there. But it's a good space to be in, and things will do well. Let me give you another example. Tata Motors finance company runs an NP of 25%, which is wow. But this will correct as the cycle moves forward.
Okay, thank you.
Yeah. Okay, guys. If anybody has questions, they can ask, please.
You don't track insurance companies, and when you speak of financials,
Yeah, I do, but this lecture was targeted towards the financial, towards the lenders only. But you can ask your insurance question as well. Go ahead.
no, the most basic one, top picks, PSUs or private companies,
No,
best
so
growth story.
I posted this yesterday when I was analyzing the HDFC group, and I had analyzed all four companies and HDFC Life as well. On the life insurance side of it, on the life insurance side of it, nowhere, no one comes close to the private insurers that are really there. Their business model and business concentration is far superior than an LIC whose IPO seems to create a lot of euphoria amongst people, and people have not even analyzed the business model and the quality of business that LIC is really doing. If you were to personally ask me, I will never apply to the LIC IPO because the business model is not good enough that it requires a three times embedded value valuation that is there. So that is one part of it. The second part of it is on the general insurance side of it, I will now start to wait for private insurance companies, private general insurers to get listed. We have IHDC Ergo, which is lined up for an IPO. We have now got Star Health that is there. Their metrics are far better and they operate on a far better underwriting quality than a public insurer that is there. So in insurance, I generally tend not to go towards the public insurers.
So Aditya, in the chat box, there is a question on L&T Finance. Any views on that?
Yeah, L&T Finance Holding is. I had put out this tweet 2.5 years ago that there are two companies that are a clear avoid, which is about Edelweiss and L&T Finance Holding, and on both of them, I'm extremely right. L&T Finance Holding has a very confused business model that is there. Now they've exited the wholesale business completely and will focus only on retail. But I have never been able convinced about their underwriting quality or the strategy that they are really following. So I will tell them that this is a stock that is a clear avoid for me at this stage. Don't really understand the business strategy or the underwriting strategy from the management. However, if in the future there's a change and they become even more clinical in their approach, then it is worth the view. But however, looking at the situation right now, absolutely.
Okay. And now another is on Federal Bank. Again, views on that.
Yeah, one of the banks that has been a positive surprise for me in the last 1.5 years. They have done exceptionally well on the asset quality side of it. Steady bank, steady management. Sham Srinivasan is a very good, decent guy that is there. One of the candidates from graduating from the smaller private sector bank to mid-tier private sector bank, taking the place of Kotak when Kotak graduates to the larger private sector bank pool. I like the bank, like the company that is there. It will be a steady compounder that is there.
Yeah. So another is on IFL Finance. Maybe people asking your views on that.
Yeah, so there's been a lot of social media buzz on this company. I don't find anything exceptional about the company. Point number one. Point number two is there could be a upcycle within the NBFC space where this stock could also go up, but nothing exceptional that tends me to believe that I should go ahead and buy this stock. If IFL Finance states that whatever ROAs and the price to book it trades at, HDFC Limited makes much better sense for me. after looking at the subsidiaries that it has got and the core business that it really operates in. If HDFC Limited is able to clock up a 9-month growth of about 48%, why should I be looking at IIFL Finance? Give me a solid reason for that. I can then look at it. Uh, Today, the biggest contrarian bet for me continues to be HDFC Limited rather than any other fancy name because the business is robust and the valuations are completely in my favor that I will end up making money if I invest.
Aditya, so on the question of HDFC, we were having a lively discussion on this a couple of
Yeah.
days ago, where we were trying to kind of apply some rationale into investing in HDFC Limited versus HDFC Bank. So, if you have any thoughts on that, that would be informative.
No, class business. Simple reason why the stocks are going down. Simple. If you want the market to go down, you kill HDFC Bank because both of them got 10% weight inside the index. Business wise, exceptionally very strong for HDFC Limited. They have done really well as the real estate cycle has started to move up. The NPS continue to be in control, and the corporate side of NPS is a little bit of problem, but the company anyway is doing exceptionally well within the housing finance space. That is the stock that's been always my favorite. I never went to DHFL or any kind of NBFC, also 17, 18, 19, 16, 17, 18 when the NBFC euphoria was playing out. And HDFC survived, HDFC will survive, HDFC will do well. On HDFC Bank, very clear, the loan growth slipped from 20% to 12, 13%. That's why the market did not like it and market derated the stock by not giving any return. Once it comes back to the 20% steady growth that is there, the company should do again really well. Nothing of any concern as such. However, when the stock prices don't give return, there's a lot of narrative that tends to get built up.
Yeah, I have one question regarding this Edelweiss. Just now you said that this is one of the company which you won't invest at any price. So means one narrative is going in the market that they are in the process of demerging multiple of their businesses. So this will unlock the value like their wealth management, ARC business, mutual fund, and many more. I do not count. But do you have some study on that? That these are just narratives and not create any value, or
Hmm. See, it's very clear for me. If Edelweiss, if you are investing in Edelweiss as a lender, I will say absolutely no, because I know the underwriting quality that Edelweiss does really does, and I will be nowhere close to it. If you want to invest in the ARC business, the fact remains that they are one of the fastest growing ARC business. So that could be a potential for you, right? But I will say that there are many other ARs, sorry, on the mutual fund business. There are many other mutual funds already available. That why do you want to really go there? Edelweiss is a very confused business where I don't feel where is one business where they are a leader. They are a leader in none of the businesses that are there. If you look at my investment strategy, I always look at trying to buy a leader, right? So, for example, Kotak, I believe Kotak is a leader in the large private sector bank category where they do exceptionally well and they lead the NPA cycle that is there and avoid it. So where is Edelweiss? Edelweiss is sort of an NBFC which does not have any moat on lending. It does not have any moat on its insurance business. Neither does it have a moat on the mutual fund business. They are sort of an ARC business where they have the first mover advantage. So where is what appeals to for me to go into Edelweiss and buy that stock? Rather than that, I can buy all of these businesses bit by bit. For example, on the insurance space, private insurance companies are already available, which are doing far better than Edelweiss. That is there. So why should you look at Edelweiss? Don't know.
yeah, one example is that they have the wealth management business as well, and their standalone valuation comes around 4,000 crores, and the entire market
No.
cap of Edelweiss itself is 4,700 crores,
So
something
there's a
like that.
holding company discount that should come in, no? So Edelweiss is a holding company of its wealth management business. So if the valuation is 4,000 crore, as you say, put a 80% discount to it because It's a holding company.
Yeah,
Agency
but
Limited.
if it get demerged, then their shareholder will get separate shares of the finance.
Yeah, but the holding company discount still remains. Na? It does not go away even if they demerge. How will they demerge? If they demerge completely into a different company and give the shares, it's a different story. But I'm not very positive
Yeah,
on the
yeah,
wealth
yeah.
management business because as
That's
more
what
and
their plan is.
yeah,
They are
no, no,
planning to create a separate company and give the shares to the shareholder, existing shareholder, like that.
no, no, that's fine. But within the wealth management space, see, I'm an asset manager, right? I see the wealth management margins will continue to shrink further. सिंपल बात है एसेट मैनेजर के मार्जिन श्रिंक हो रहे हैं म्यूचुअल फंड बिजनेस से मार्केट श्रिंक हो रहे हैं तो वेल्थ मैनेजर के मार्जिन और भी श्रिंक होंगे आई एम नॉट पॉजिटिव ऑन दैट बिजनेस there is intense competition in that business point number one point number two is as more and more direct platforms will come in they will shrink the margins that these guys are really making. It's not a great business to be in to standalone own it. I will not never own it. I have never. IFL Wealth Management has got listed. I have never recommended that. You should not even look at these businesses because they will face cost pressures as the margins continue to shrink on the asset management business, which will come down to the wealth managers also.
Yeah,
Yeah,
thank you,
Aditya, we
Aditya.
can go to the next
No
part.
more
Just a
questions.
quick comment, right? You talked about Edelweiss not having a moat in mutual funds. Uh, I don't think any company will have a moat in mutual funds. Right?
Yeah,
That's
exactly.
such a
Exactly. Exactly. So that
so.
is what I said. Now that they don't have a mutual fund across, don't have a moat across any business that is there. Right. A mutual fund is a business which is very commoditized. Right. Even ACFC, AMC only has a little bit of distribution mode that is there. Right. With their bank distribution that they have. Right. Other than that, they don't have any mode that is out there. Just that it's a new AMC that is there, relatively new as compared to the older AMCs, so it is going fast. Once it reaches the scale, reaches a certain amount of scale, then there also growth will start to level up that is there for the company. So then what we will do? So the whole point is that I don't see them either a market leader or either being very aggressive on any space that is there. I have seen Rashesh Shah going from an NBFC lending model to a co-lending model, which is a very completely different model and where the spreads are very, very dramatically low as compared to a pure play lending model that is there. So the business model is not very clear on these guys, and I that is why I was able to clearly identify this way back in 2016 and 17, and I have put this out both on Edelweiss and L&T Finance as well as Mahindra and Mahindra Finance. Not very clear, not very appealing, so you should be avoiding.
Ajit, any views on have you tracked Canfin Homes or any views on that?
Yeah, definitely. So it's a good company, great company, very expensive, but great company. Will remain a secular wealth creator. Step down PSU will do really well. Of course, there will be no continuance of the management as there is in HDFC Limited. However, the company will do exceptionally well, and very happy with that company as well.
Hi Aditya, how do you see this capex cycle? How to track this capex cycle revival that everybody is saying? I mean, what are the I mean everything everybody is saying about it. So what are your views on that, and how do you track it?
Very simple. I keep telling people that go on bank calls and ask them that are you what is the amount of corporate loans that you are really wanting that you are really giving out. Very simple. The start of the corporate cycle will happen when corporates go and ask for loans. India is not a country which has its own money. This is a big misconception that corporates in India do capex from their own pockets. Very few companies are Asian Paints. Very few companies are Pidilite, and very few companies are Vinith Organics or companies of that sort. Reliance, the biggest company in this country, does everything on its on bank money. It has a loan book of about 250,000 crores that is there. Very simple. Every quarter, I go on the ICICI Bank call and ask them what is your view on the capex cycle because when I, as a corporate in this country, be it in pharma, be it in infrastructure, be it in any of the manufacturing or allied industries that is there will want to expand, I will approach a bank to finance that. And banks and lenders will be the first people who will tell you that look, I am finding that people are coming increasingly to me for the corporate cycle. So the biggest lead indicator for capex cycle is banks. When banks start to dole out aggressive corporate loans, you have to understand that capex is slowly and steadily starting to come back. That's one of the biggest leading indicator that is there. The second leading indicator is the hirings that these companies will start doing, which start to dramatically increase, and you have to keep a watch on what is their hiring ratio that is there, which you can ask on the call or you can get uh, from the annual reports that are there. And on the ground also, you will realize that secularly everybody is trying to expand. My gut feeling is the biggest sectors, which is the auto sector, will not expand until 2024 or thereabouts. Uh, it is 50% of India's manufacturing GDP. Rest all are very small sectors. Specialty chemicals expanding will not have any effect on the economy. The infrastructure sector, then the next bigger one, will start to come where anywhere between 2023 and 2024. So that's the broad range where I'm looking at that the capex cycle will start to revive them.
Okay. And the second question is with respect to this retail lending focus and corporate lending focus. Many banks are focusing on retail lending, whereas we are seeing HDFC Bank focusing more and more on corporate lending. So how do you see this strategy playing out?
एक सेट ऑफ बैंक है जो हर्ड बन के रिटेल में जा रहे हैं, सोच रहे हैं रिटेल सेफ है, और एक सेट ऑफ बैंक है जो अपना दिमाग यूज कर रहे हैं और सोच रहे हैं कि यहाँ पे कोई कंपटीशन नहीं है तो आपको यहाँ पे जाना है. तो सिंपल है. अब आप सोच लो कि आपको किस बैंक में जाना है जबकि उस बैंक का स्टॉक प्राइस ने रिटर्न नहीं दिया. वो बैंक अपना दिमाग यूज कर रहा है और बाकी सब बैंक अपना दिमाग नहीं यूज कर रहे हैं. हमें स्टॉक मार्केट रिटर्न से कोई मतलब नहीं है, हमें मतलब है वो बैंक के बिजनेसेस में क्या होता है. ऑन कॉर्पोरेट साइड ऑफ इट, SBI and HDFC Bank are the only people who are available to lend. Now ICICI has also come in. Those guys are the only ones who are financing the corporate capex that is there. They are lending to people like Tata's. They are lending to people like Reliance, right? Why should they not lend to people who have credible history and have the ability to pay back? Everybody who is trying to go retail is hurt, and it never ends well generally. So I've been continuously warning that it does not end well because good retail is as much available as there is. Then उसके बाद subprime retail lending भी show होता है.
Yeah, okay, got it. And my final question would be on the MFI cycle. So how do you see the cycle play out? I mean, I saw a latest report which says that MFI cycle is almost at bottom. How do you track
Yes.
this cycle? That will be my last question.
बंधन जब bankrupt हो रहा है तो cycle bottom out हो गई बस, और क्या. And I'm serious.
Okay.
बंधन 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 मतलब बंधन का जो बंधन is now sitting at a provision which is equal to two RBLs. RBL has a market cap of 8,000 crores, and it is sitting on provisions which is equal to two times RBL. Right, 16,000 crores के उन्होंने provision बनाए हैं सिर्फ COVID-19 crisis.
Okay.
अब मतलब इससे ज्यादा बड़ा बॉटम नहीं होगा तो क्या ही होगा, राइट. सो दिस इज nobody can say that if this is the exact bottom or not, but what we can say is that the process of bottoming out has already begun, and the next 2-3 quarters should mark a dramatic improvement in Bandhan's loan growth as well as asset quality that is there. I just talk about Bandhan because Bandhan is the market leader in microfinance loans, and it has a very good book in East as well as all the geographically problematic areas on the MFI side of it.
Okay, so I'll put my question a little differently. Are there any lead indicators that you would see for the cycle revival?
Yeah, but कोई बंधन बैंक नहीं खरीदना चाहता, बोल तो रहा हूँ.
Okay.
Simple. No, you have to. Bandhan Bank, MFI sector is a cyclical sector. Okay.
Yeah.
In the cyclical sector, very simple rule. Buy when nobody wants to buy them. Buy those who will survive. Right. Point number 2. ठीक है. And then sell when everybody wants to sell. अभी मैं आपको बताता हूँ. कोई माइक्रो फाइनेंस के ऊपर ब्रोकरेज रिपोर्ट दे रही है क्या? क्या बात करो? देखो, अगर कोई रिपोर्ट नहीं दे रही है, exactly the time to buy. when everybody starts to when the cycle will turn up and it will go, the stock will go to 600 and 700, everything will look hunky dory. That's the exact time to exit. So this is not a buy on the either microfinance sector, but something for you to think about. I have tweeted multiple times that the microfinance sector is now very good sector to look at.
Okay, thanks a lot.
So
Hi
Aditya, let's do
Aditya.
a time check. How much time do you have more? Because I think questions might keep coming, but just wanted to do some time check.
Yeah. Yeah. So, are you asking me or Azim?
Yeah, Aditya, आपके लिए है. Sorry, this is for you.
Sorry, yeah, I was not able to hear. So let's do it up till 11, if that's okay, right?
Okay, sure. So,
Anna?
others, please, carry on with your question. Yes, thanks, Aditya, for the clarity. Yeah.
Yeah, thanks.
Hi, Aditya. Just a question on the housing finance sector. You mentioned that you're a big fan of HDFC Limited, and you also said some kind words about Canfin Homes. So my question is, where do you see Aavas Finance in this band, and how do you see it playing out in the housing finance cycle?
Mm, I don't. They don't have a season book, so very difficult for me to comment on them. A season book will be that they go through a proper NPA cycle of uh, proper NPA cycle 2 or 3 times, and then I come to know. I find it very peculiar that they lend to people who are upwards of 14, 15, 16% and have a NPA ratio which is very low and lower than HDFC Limited also, which has an NPA ratio on individual loans at about 1.44%. Their NPAs are far lower, which is very hard to understand for me using my brain because I tend to use a lot of common sense to analyze these companies.
Completely agree, Aditya. Additionally, on that similar note, I wanted to understand then why is it so highly valued in the market compared to its peers?
Very simple, because they have a higher ROI than HDFC Limited. So for every 1 rupee of loan that they will give out, they will make far more money than HDFC Limited because they are lending to their interest rate for an HDFC Limited. For example, if the interest rate is about 9%, for an Aavas it will be 16, 17, 18%. So then what will happen is that for every incremental rupee that HDFC Limited disburses, it makes far lower money than an Aavas financer. So, have you ever thought that why does Bandhan get a 6 times price to book, whereas HDFC never got a 6 times price to book? Very simple. HDFC का एवरेज yield जो होता है लोन के ऊपर वो 8 से 10% के बीच में रहता है हमेशा, whereas a Bandhan has an average yield of 20-25%. So on every incremental 100 rupee loan that I will give, Bandhan is able to make 25 rupees on it, uh, which which uh, which explains that why should it get a higher multiple.
Got it. So from that, can I deduct that as long as they keep their asset quality in check, they should do
Yeah,
well in an upcycle because their
definitely.
spreads are so good?
So definitely, it's a high risk, high return game where if you buy them at the bottom of the cycle, you make a lot of money. If you buy them at the top of the cycle and the asset quality is just going to burst, there is a problem. Now let me tell you again another thing. The Bandhan microfinance problem started much before the COVID-19 crisis that is there, right? The Assam problems were real problems for them, and they lost huge chunks of money in Assam, right? So microfinance lender, the top is created when they traded 6, 7, 8 times price to book, and that's the exact time to get out without worrying के इसका exact top कहाँ बनेगा. You have to just get out when market gives irrational valuations to that company that is there. On Amas, it is very clear that they also do a lower category of home loan borrow that are there. Then you have to be very careful as to how the asset quality turns out. And on NBFCs, let's be very clear. I don't believe the asset quality of even one NBFC bar is just limited.
Got it. Thank you so much, Aditya.
तो आदित्य भाई, ये जो आवास वाला क्वेश्चन पूछा करण ने, डू यू थिंक ये जो मिस्टीरियसली लो एनपीएज हैं, इसका जो सीक्रेट रेसिपी है, ये इसके जो प्रीवियस पेरेंट था एयू बैंक, ये वहां से कुछ सीख कर आए हैं? मतलब कैसे एनपीएज मैनेज करते हैं?
यार अगर कुछ सीक्रेट रेसिपी होती ना तो मैं आपको बताता हूँ क्या. कोटक बैंक, एचडीएफसी बैंक, ठीक है, एचडीएफसी लिमिटेड में हमसे भी ज्यादा स्मार्ट बंदे बैठे होते हैं जो ना सिर्फ यही देख रहे होते हैं कि कौन मार्केट में क्या कर रहा है. ठीक है, अगर कुछ सीक्रेट होता ना तो मार्केट में सबके पास वो एक सेकंड के अंदर आ जाता है. लेंडिंग इज अ कमोडिटी बिजनेस, उसको कॉपी करना बहुत मुश्किल नहीं है, राइट? कुछ सीक्रेट नहीं होता है. वो तो जस्ट ये होता है कि there is a lot that does not meet the eye, and that's about it. So as I said, on NBFCs, I don't believe the asset quality number. Never. I will tell you a brief example. The brief example is this: when Capital First was merged into IDFC Bank, Capital First declassified 500 crores of loans into NPAs because the recognition of NPAs was very different when they were a bank and when they were an NBFC. So the broader point is, I don't believe the NBFC NPA numbers. Never.
Fair enough.
Aditya, there is a question on Equitas. Any thoughts on that?
So Equitas, again, a small finance bank, they have been able to diversify their book really well. That's another company which has the potential to do really well over the next 3 to 5 years. Let's see how the business turns out over the next 3 to 5 years, but have a good positive outlook about the line.
Thanks, Aditya. So others, if you have any question, please, you can raise your hand and put across your questions.
So, Aditya, one quick question. Now, within the banking space, while we talk about NPAs as a negative they are and what occurs with them, as IBC and other processes play out, and some of these underlying companies, kind of move back to a business cycle, do you see any banks whose exposure in NPAs has some large exposures which kind of become like a special situation over time, or is that too far fetched?
PSU banks, all PSU banks.
Okay.
सिंपल, मतलब अगर आपको एनपीए देखना है तो उसको पीएसयू बैंक से जोड़ो. बड़े चंकी लोन्स कभी भी प्राइवेट सेक्टर बैंक, अच्छे प्राइवेट सेक्टर बैंक होंगे जहाँ पे कोई फ्रॉड नहीं हो रहा है, वो बड़े चंकी लोन्स ऐसे ही लेते हैं. Unless for example you are an Axis under Shifa Sharma, or you are a Chanda Kochar, or you are an ICICI under Chanda Kochar. No. On good management, you will not find very chunky loans, 10,000, 15, 20,000 crores of loans being given out just like that.
But Aditya, Chanda Kochar was not Chanda Kochar till she became Chanda Kochar. So what I mean is, once we have given out chunky loans, unless they go bad, we do not find it out whether they are going bad. Most of the banks usually do evergreening, and usually they do not come out unless it blows out of the proportion.
So if let me also give you, lending is a game of probability. If out of 10 loans, 9 loans are going bad, you are doing something wrong. If out of 10 loans, 7 loans are good and three go bad, it's fine. Right? So it's a game of probability. You have to analyze that. All through 2014, 15, 16 now, ICICI Bank was very famous for evergreening of loans by restructuring the loans. A lot of things are there which we can have discussion later about. But it was very clear that ICICI Bank was doing what it was doing. Let me give you an example of why I believe in Kotak. The only bank where I believe the asset quality is very good. They have restructured 0.2% of their book. Just 0.2% of their book. They have not sold even one loan to asset reconstruction company. The book is supremely very clean. They have flipped a lot of loans which were supposed to not be NPAs and have NPA and become NPAs. This was exactly opposite of what Chanda Kochar was doing in 14, 15, 16, where many of these banks were reporting high restructuring numbers that are there. So, lending is a lot about probability, it's a lot about trust, and you have to really understand what the managements are really doing. एंड तभी मैं कहता हूँ ना कि खुद तक भी ऐसे कॉन्फिडेंस नहीं है, बहुत सालों की मेहनत करके मुझे समझ में आया कि वो कर क्या रहे हैं.
Adit, can you tell a little bit what do you mean by restructuring of loan? Can you give some example?
Okay.
What does it mean exactly?
Okay. So what really happens is that once I have given a loan to, let's say, X person, and that X person is not able to pay back, banks offer some lenient repayment guidelines. For example, पहले अगर आपको interest rate पहले आपको पूरा लोन पे इंटरेस्ट 10 रुपए का देना था तो बैंक बोलेगा कि अब आप 5 रुपए ही दो, एंड देन लोन का टेन्योर एक्सटेंड हो जाता था। उससे क्या होता था, people could window dress and pay 5 rupees, and that NPA would not be shown as NPA and it would be shown as under restructuring, and that NPA can will be hit down the road, right? So बहुत सारे तरीके हैं NPA को restructure करने के लिए, एंड ये वन तरीका है जहाँ पे वो लोग बोलते हैं कि आप कम इंटरेस्ट दीजिए, या तो फिर ऐसा होता है कि 2 साल तक आप इंटरेस्ट ही मत दीजिए और उसके बाद आप इंटरेस्ट दीजिए, माफ कर देते हैं। तो आरबीआई को ये 2014, 15, 16 में दिखा कि बैंक एनपीएस रिकॉग्नाइज नहीं कर रहे हैं, एंड दे आर ट्राइंग टू किक द कैन डाउन द रोड, which was exactly the case with Axis, which was exactly the case with what do you call this, with ICICI. Then RBI disallowed restructuring completely. Now it is not allowed under any circumstances. COVID-19 was a case where RBI itself said that I will allow one special restructuring window that is.
Thank you.
So, a few thoughts on CUB, City Union Bank. Then there is Arman Finance, and of course Poonawala. Also, few people are interested. Can yeah.
CUB disappointed, not really great. Disappointed with the management. Which one said Arman, fair enough. Not very positive, not very negative, very neutral on that stock. But the stock is extremely expensive at 4 times price to go. It's very expensive. And then finally about Poonawala. Poonawala, there's nothing to talk about. The book has not even they've not even lent. Where is the seasoning of the book? And at 3.5, 4 times price to book, people who are buying it are just buying without even understanding the management, without even understanding anything, which is not really great. So you have to wait and see how the management turns out. They have a SEBI investigation which also went on, which is not really great. The insider trading scenario that happened on Poonawala is not really great.
Yeah, so thanks. I think that was last from the chats that we
Yes.
have. So anybody else, if they have the question, else we can. I think we are almost on the verge of 11, which was a hard stop for Aditya.
Yeah.
Just a follow-up question on Avas, Aditya, if you don't mind.
Please go ahead.
So Avas already trades at around 7-8 times book value. Am I right?
Yeah, correct.
So even if the cycle plays out well and it manages to keep a check on its asset quality, I mean, can it really create value for shareholders for like
No
the next
scope
3-4
for
years?
no scope for re-rating the stock price. The growth, the growth from the business will now drive the stock price appreciation. That is there. Unlike some other NBFCs which trade at 0.5 times price to book, there are two sources of return. One source of return is the valuation expansion, and the other source of return is the business growth that these companies will get. On Havas, I find there's not much scope for valuation re-rating.
So doesn't it pose a very high risk, and shouldn't it be in the avoid basket then? Because when there are so many better options available, better value plays, why would you go for an Avas when it's already trading at 8 times book value?
Thanks for answering my question myself.
Okay, thanks a lot.
I guess that was the end of questions for this session.
Yeah.
Thanks a lot, Aditya, for coming
Thanks.
and patiently answering all the questions regarding the financial services sector. And
Yeah.
Saket and anybody else who wants to make any closing remarks.
So first of all, thanks Utkarsh for facilitating it, and Aditya, it was a great session. You really simplified it, the clarity with which you, I think, answered some of the questions, and of course, patience was definitely a hallmark. I think, and I've been following your tweets, especially the SDFC one. Really, brought out the kind of clarity that either a retail or even an institutional investor can vouch for. So thanks a lot once again for taking time out and helping us with some of our queries. Really appreciate it.
Thanks a lot, Saket and Utkarsh, for having me. And it is brilliant session. Thanks a lot for everything that you've done today.
Thank you, Aditya. I guess we'll now close this session.
Yeah.
Replays would be available for this session, and you guys can also check out. Aditya is one of the partners at GST Investments. Previously, we also had Anish for a session on pharma, and that was also very brilliant. You guys can also check that out as well if you want to understand the pharma sector. Aditya, thanks a lot. With this, I'll be closing the room now.
Thank you.
Thanks everyone. Thanks for taking time out. All
Thank
the
you. Good
listeners
night.
as well. Yeah. Bye.
Thank you all the mods, Sakit, Mohit, Vineet, Srinivasan, Karan, Ajay. Thank you.
Thank you, Aditya. Thank you, Utkarsh. And thanks, everyone.